Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, the news, the analysis, so you can be informed in your trading decisions in just a few minutes. We're going to have very in-depth conversations in our trading lounge the next couple of days, looking for opportunities post-election. Sign up for that 15-day free trial today at tackletrading.com. But Matt, that is what I think a lot of traders around the world, now that we know the results of the election, President Trump will be the next president of the United States. Where is the overperformance? Where is the next trade? Right. Break down the technicals for us.
Yeah, first and foremost, big congratulations to President Trump for getting that second term here last night on a clean victory here. And I think that was important for the market, that we don't have to really kind of deal with the next 6, 7, 8 weeks of what's going to happen here. Remember, number one thing the market doesn't like is uncertainty. We have clear certainty coming out of the election. And I think over the next few days, not just today, but tomorrow, the next day, really kind of as we digest the central bank this week as well, having an understanding of the immediate winners, the immediate losers, what sticks, what doesn't. That's going to be a really interesting and important conversation over the next few trading sessions. But as of right now, we're basically seeing the moves in the market that kind of were anticipated with the Trump victory. You're seeing strong moves in crypto. You're seeing strong moves in the cyclical areas of the market. Technology, the aggressive side of the environment doing fairly decent here today. Defensive down a little bit. What's your thoughts on it?
Yeah, no, when we were in the trading lounge yesterday, Matt, all of the coaches that were there were like, all right, what's our post-election plan? Scout out the next trade, right? Sector rotation, what would be the winners, right? Assuming we don't know the results. Well, now we do know the results. And that is going to be where, I'm going to be looking for pattern development on the traders lounge. I'm going to be picking the brains of other traders in the traders lounge, right? What happens now? What does the broad market do here, right? I think you said it yesterday. The broad market is not as interesting as the individual areas of the market
True.
after the election, right? You said that yesterday, and I think that's going to remain true in the coming days.
Yeah, but I still think understanding the technical side of the market's going to be important as well, because when you look at the kind of the environment here just on the market itself, I kind of see this as a catalyst, right? Whether it's a catalyst like the Fed or the catalyst like an earnings. So let's say the SPY was a stock. You had positive earnings come out. It just gapped up above resistance. What would you say? You would say, okay, give us a little bit of development. Let's see if this gap sticks. Does the gap fill? You would treat it like a technical side of the equation. And when you're looking at the entirety of the market, I think it kind of stands out for that technical side. You gapped up right above resistance, which means what do you want to see? You want to see consolidation. You want to see it kind of hold that gap out channel. You want to see that form that high base, that secondary pattern, some degree of momentum pattern there. When you kind of look at it from a broader perspective, not just the SPY, but you look at RSP, obviously a little bit of a gap up, but didn't continue to go up. The gap started filling after that gap up. The Q's gapped up right back up into a very well-known resistance area. So what would you want to see there? You would want to see it get dialed in a secondary pattern, kind of following that central bank. And so the SPY and the Qs gapped up into technical situations where you can clearly identify a pattern development location because of where the market gapped into. It gapped up into a known resistance level on the Qs. It gapped up slightly above resistance on the SPY, and we really haven't seen the additional momentum following that overnight action. Remember, what we're seeing in these gaps is a lot of the overnight action that occurred throughout, because Trump's victory came in at about 2 o'clock in the morning on the East Coast when it became official, but it was fairly well known throughout the night as those vote counts started coming in, and the market started pricing that in a little bit quicker. And so what we're seeing is kind of that immediate, aggressive type movement on the overnight action. We really haven't seen it continue a continuation event following the cash open here today, which tells me pattern development here is going to be very key. Do we flag base pattern, catch the 9? Do we high base? This is going to be a really important technical pattern because not only do you have a little bit of a catalyst event, the election, it was a clean election, but now you're talking on the cues, for example, you're right back into that multiple time frame conversation. You're right back into that, oh my goodness, this is a really, really clean breakout opportunity. And so you certainly like what you're seeing on the cues. You certainly like what you're seeing on the spiders. You certainly like what you're seeing on the broad market itself. IWM, for example, having a day and then some here today. Small caps doing absolutely fantastic here today, gapped up extremely large. Dow Jones on the cyclical side of the equation. This was a big area for the market under a Trump victory, was the cyclical side. Cyclicals actually doing pretty good on their gap up. Dow's up about 3% here today. Once again, seeing the same thing though. Very strong overnight action. Haven't seen that cash open and the market following the stock market opening here today. Haven't seen the follow through here as of yet in any one of these spaces. What does that tell you? Tells you need to see that next pattern.
Yeah, I know. And looking for those next patterns here in the tackle today, in the traders lounge, in our scouting reports, and the last thing I'd say on this before we get into other little stories is when you look at the big catalyst, the post-election, the COVID vaccine coming off the COVID lows, when Powell pivoted in 2019, when Powell pivoted in 2023, you saw surges, and then you saw pattern development that was very consistent, very orderly, very easy to read. We're going to help you break that down and identify it.
And specifically, even that 16 one, that's a good call out because we had a really good run in 16, a really good run in 16. But that didn't happen just on a V shape. There was patterns that happened within that development. And so
orderly. And so, I'm sure we'll talk about that maybe in the Tackle Trading newsletter this weekend. No economic news this morning, Matt, but no rest for the wicked. Fed meets tomorrow. We'll preview that more tomorrow in the Tackle Today. But, election digest results today, Fed meets tomorrow. And it's going to be very interesting. We'll give a full preview of that in Tackle Today tomorrow. Individual stock stories. What do you have for us, Matt?
Yeah, just a lot of, areas of the market that would do really good under a Trump victory, such as the crypto stocks. They're doing very well here today. Coinbase gapping and running a little bit. Like we said, in the broad market, the gap was strong, but we haven't seen follow through. That doesn't mean we're not seeing follow through in those specific areas of the market that were anticipated to do well under a Trump victory. Coinbase, crypto stocks in general, certainly one of those areas doing really, really, really well here today. On the flip side, obviously in a marketplace, not everything is going to do great. Obviously for solar, some of those clean tech, clean energy stocks doing a little bit negative here today, as there is some anticipation that the Inflation Reduction Act, which really was a supporting, stimulus program for that renewable energy side of the equation, that's obviously a little bit concerning on the First Solar and those other solar components out there in the market today. And obviously DJT, which is, True Social, Trump's parent company, that gapped up, I want to say gapped up about 32% here today, having a little bit of a volatile day here today, though, because yesterday, Mark, they kind of quietly, I know it was election day, and Trump had a little bit more important things to focus on yesterday, but quietly DJT also reported earnings yesterday. And so that's also having an impact on the share price here today, as they did show a little bit of a wider loss than was anticipated. That is showing a little bit of volatility as DJT gaps up, sells off a little bit. Let's take a look at the technical side of these three stocks, just to kind of show you what we're seeing a little bit here today. And Coinbase, certainly not the only one here, just using it kind of as a proxy to show those Bitcoin miners out there. Coinbase gap and then run. Like we said about in the marketplace, gaps were strong, but we haven't seen any real follow through yet. You are seeing follow through on a lot of these asset classes that were linked to Trump, such as Coinbase, other crypto miners as well. When you're looking at for solar, kind of as a proxy for some of those solar energy components, gap down, did not sell down, however, did have obviously increased volatility quite a bit. Concern here, no doubt. Concern technically, concern fundamentally, concern economically on the renewable side of the equation. And First Solar is certainly showing that here today. And just want to show you the kind of the volatility we're seeing here on DJT here, as they obviously gapped up really, really, really strong here today on the overnight action, but gave a lot of that back here today because once again, DJT, certainly a proxy for Trump, certainly has been trading as a proxy from the gambling markets and the probability markets or the prediction markets over the course of the last couple weeks. But today, you got to take into account earnings as well, because that is having a little bit of an impact. That's what we got for stocks in the news. Obviously, in the Traders Lounge later on today, we're going to have this conversation of winners and losers, identify every aspect of the market. But as for the tackle today, I think we have an understanding kind of where those areas of the market that are moving, where those areas of the market are showing a little bit of weakness here today.
Yeah, absolutely. And, the commodity dollar yield move is one of the stories post-election, right? Lots of excitement happening in stocks, lots of excitement happening in just about every corner of the universe, in markets in general. Breakout of short-term resistance on the dollar, yields up strong as well, Matt. This was to be expected to some degree if Trump won. Market telegraphed that on the Trump trade coming into it. Getting some follow through is what comes next, though, Matt, isn't it, on these?
Yeah, a real strong move here on the dollar. One of the more sizable moves we are seeing in the entirety of the market here, and it was strong all night long. It was not just one singular moment in time. It wasn't a gap up. When you're looking at kind of the strength of the dollar move here today, you can kind of see that story on the euro dollar cross pair yesterday, as you see that. And I'll just kind of come into a 15-minute chart here, Mark. But as you can see from basically 7 p.m. Eastern Standard Time last night throughout the entire night, you just started seeing the selling behavior on the euro dollar. Obviously, the dollar's going up, 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 up. That's reflecting the tariff conversation as it started seeing that Trump was going to win the presidency fairly clearly early in the night. That's where kind of the probability was shifting. And the vote count obviously was going in Trump's favor. You just started seeing the dollar start to go up, 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 euro go down, 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 down. I do think that's reflecting a little bit of the tariff concern and how that would impact yields and the currency itself. And so you're having a sizable movement there on the dollar. Obviously, the euro is the cross pair to that, so you're going to see the opposite impact. Now, the question is, is this the beginning point of something? I think there's a lot of fog of war type stuff happening today. That's why I think it's important to see the kind of not just today's price action, but what happens over the next couple days, including the central bank here over the court, central bank on Thursday as well. And so we're not done in the event side of the equation here. Expect a little bit, especially with the volatility over the last couple of days. Expect volatility to continue in the currency market at least through Thursday, most likely Friday, as we start to price in what the central bank is going to do here and what they have to say about the monetary environment following now a clean victory coming out of the Trump administration.
Yeah, absolutely. Gold recovering during the session. Gold's been very resilient in 2024. Moved down, trying to fight back up. As many things, Matt, the one thing that I am approaching these markets and just about every area is like, okay, respect the first move, but don't overreact to the first move. Make sure that you see pattern development before you make any major decisions in the portfolio. Haven't touched my gold positions, haven't done anything today. We'll see how this plays out. What's your take from a technical perspective?
I think we're seeing an overreaction here on the gold, and it's an automatic thing because again, I don't think investors are waking up on gold today saying, "Oh, we don't need to own gold because the U.S. debt is going to get fixed here." I don't think that's what investors are saying here on gold. I think what you're seeing on gold is an algorithm movement to the downside, reflecting the absolute momentum strength of what we're seeing on the dollar side. Remember, we have been so impressed with gold holding up against what the dollar is doing. A sizable move on the dollar like we saw here today, that's going to have an impact on the commodity side of the equation. You're going to see volatility in every single degree of the commodity side of the equation when the dollar does what it does here today. The question therefore becomes, does the dollar continue to do what it is doing today, or are we just pricing in some concern in the market on the yield side? And I would lean towards we're kind of pricing in a little bit of concern on the yield side, but does that have secondary follow through? And so I think we're seeing an algorithm move here, Mark, that is just based on the United States dollar impacting all of the commodity side of the equation in the immediacy. But you come over to gold stocks here. And gold stocks are showing you just a little bit of that overreaction here today as they do gap down. But then what did they do? They didn't continue to sell down. They gapped down, got gobbled up a little bit, despite the market on the cash open kind of hovering in that doji territory. And so I do think we're seeing a little bit of an overreaction here on the gold side of the equation, just reflecting that that extremely strong dollar move here today. But once again, you come over to the dollar and you say, all right, well, are you going to start a new trend? Or are you going to start? Well, here's my point. My point is, as you start working into 106, you start working into massively important resistance. And as important as that 101 level of support, that held against some extremely aggressive volatility. Well, I kind of feel like we're going to see a little bit of the same thing. So I don't want to overreact to the gold side of the equation following an algorithm move on the in pricing in the yield conversation on the dollar. We're going to have to wait to see that, which means if you just want to forget everything I said and just listen to what Coach Mark said initially, secondary moves are going to be really important here. Secondary patterns are going to be really important here as well.
Yeah, I'm a big believer that sometimes in the excitement, markets can do one thing.
Yeah.
The next move tends to be very true, right? Very true. They're not going to be like, well, let's go back. That next pattern development is going to give us a lot of information. Just take a look at Bitcoin before we close out, Matt, and expected move up on Bitcoin. If Trump won, we're getting that expected move up right into all-time high resistance areas, Matt. This one's pretty easy from a technical perspective, isn't it?
Yeah, develop at the all-time high. I mean,
develop an all-time high breakout.
It's really as simple as that. I mean, and quite frankly, I think this is what you wanted to see. You didn't want to see something too aggressive where it just got out of control and out of hand. You want to see development in patterns here. And the patterns that develop at key levels of support and resistance are going to be the easiest ones to process. And so with Bitcoin kind of getting up into that 75,000 level, overhead is upwards of 77, 78. But again, that's kind of that zone of resistance. Secondary development, I mean, that's what you're going to see. What do we always say when you have a positive earnings report and the stock gaps up? Do you immediately just go chase it? Or do you wait on that secondary develop to see kind of how the market's going to really kind of process? And I think that's the importance over the next few trading sessions is of these winners that are clear winners today, which ones stick, which ones give us great secondary patterns. Of the clear losers, we'll just see what happens with those over the next week or so.
Yeah, absolutely. Listen, we're going to have detailed conversations, carry these forward into our Traders Lounge. You can be part of that Traders Lounge today and every day by going to tackletrading.com. Sign up for that 15-day free trial.